Most crypto investors, they think they've got it all figured out. History says Bitcoin usually tops between 500 and 550 days or so after the Bitcoin halving, which would put the Bitcoin peak and the market peak somewhere around October, November of this year, sticking right with the 4-year cycle. So naturally you're thinking it's almost over. Time to lock in the exit strategy, look for the exits, take profits, which is of course never a bad idea to take profits. But what if history's about to be wrong in the best possible way? What if this time, instead of the bull market just orderly winding down right on the 4-year timing schedule, it's only just getting started? And I know what you're thinking, no, not an extended cycle theory, not super cycle, man. Not because the 4-year cycle is broken, of course, and not because of a super cycle, an extended peak into next year, any of that kind of stuff, but because we've actually seen the longest consolidation period in crypto history combined with a perfect storm in the macro environment. Now, this could completely rewrite the ending of this cycle and set altcoins up for their biggest run ever. The golden bull run is here. And before you say, oh, Lark, shut up with all this bullshit, most altcoins have barely moved, man. I know a few have broken into new all-time highs, but that's an exception. So let's start with what's happening right now in the financial markets. Morgan Stanley's Mike Wilson, one of Wall Street's top analysts, has officially called the start of a brand new bull market. He said the 3-year rolling recession ended in April. That's when Trump's surprise Liberation Day tariffs crashed the markets, causing a very sharp sell-off in equities and crypto. But instead of spiraling lower into a brutal bear market, guess what? The stock market had a V-shaped recovery. It bounced back super effing hard. The S&P 500 has rallied 30% from its lows to just shy of 6,500 at the time of recording this video, hitting new records along with the NASDAQ. Now, Wilson's message right now is basically buy the effing dips when they come, because we're going way higher and we are still in the early stages of this particular AI-driven bull market, which is fueled by crypto insanity. Volatility and consolidation are not bad things in a bull market. In fact, they're your friend. They build a stronger foundation than straight line rallies, okay? His optimism isn't just greed talking, by the way. It's backed by fundamentals. Trade deals are easing tariff fears. Corporate earnings are strong. 82% of the S&P 500 companies this quarter beat their earnings estimates. The US dollar is weakening. AI adoption is accelerating. In the US, inflation is cooling enough to pave the way for potential rate cuts, especially when combined with weaker job reports, probably starting in September. That's what prediction markets are giving us right now, and likely cutting through into early 2026. Morgan Stanley believes this will send the S&P 500 to 7,200 within a year. Oppenheimer Asset Management thinks so too, and they just raised their S&P 500 price target for this year up to 7,100, up from previously 5,950. When the stock market rallies, risk appetite spreads, and it spills over into magic internet money. Smart money, of course, won't just buy Bitcoin. It'll eventually flow down into Ethereum, which we're already seeing right now. It'll go into large caps like XRP and Solana, and eventually find its way into even riskier things, mid caps, low caps, and meme coins. Even NFTs will get bid again. The macro switch has flipped from fear to greed, but we're not extreme greed yet, but it is a green light for capital to chase higher risk, higher reward assets. Now let's zoom in on the crypto market here, because that's what you want to know about. But before we do, guys, if you're trading these cryptocurrency markets, you got to get yourself an account over on BitUnit. It's the hot spot to be trading crypto coins, where I do most of my crypto trading these days. Here's the deal. No KYC, no VPN, no BS, available to everyone, everywhere. That's you. They're also going to give you some crazy deals when you use the link right down below here. Right here, check it out. Hit that link, you'll get a 30% fee discount straight up to VIP level 3. You're going to get a $400 deposit bonus if you deposit $2,000 or more, and you'll get up to $8,000 in trading bonus. You can throw 3 ETH on top of it if you hit the big targets. It's crazy stuff. Go check it out. Link down below. Okay, so back to this. Look, we've been stuck in the longest consolidation period the cryptocurrency market has ever seen. It's driven everyone insane. A lot of people got washed out, liquidated, just lost their minds, given up and walked away. The grind has felt endless because it has been kind of endless. One data set clocks just 36 days of any kind of meaningful expansion over the last 2 years, while the rest has been sideways chop. You've been here for a lot of this. It's driven all of us crazy. The market saw 192 days of consolidation in 2023, 238 days of sideways chop from February to October last year, and 2025 opened up with 195 days of either terrifying or boring price action. Right now, Bitcoin is hovering near its, new highs, just hit an all-time high at the time of recording this video. Very exciting. We had a nice consolidation period between 116 and 120, and then we popped up again. Tight ranges like this store energy, and the longer these ranges coil, the longer the rally becomes. Macro tailwinds only add momentum to all this, and it's thanks to the spot Bitcoin ETFs we're seeing such inflows happening. All the corporate treasury companies are adding more fuel to the fire. In fact, they bought more than the ETFs did in the last quarter. It's changed the game. Bitcoin's price movements can now be divided into two: retail era, that was before the ETFs, and post ETFs, which is institutional bids, along with corporate treasury companies. This steady regulated bid supports dips and dampens blow-off tops. BlackRock's Bitcoin ETF is the most successful ETF launch in all U.S. history ever. And just recently, Harvard disclosed a $117 million position in BlackRock's Bitcoin ETF in Q2. They join a long list of sovereign wealth funds like the Emirati Wealth Fund and many more. The same Harvard, by the way, that said Bitcoin back in 2018 was more likely at $100 than $100,000. Guess what? They're buying at $100,000. You're welcome, Harvard. Big players admitting they were wrong and piling in at higher prices is shifting the market structure, and it's going to keep happening. Now we have fewer face-melting candles happening and more institutional drip bids happening. Liquidity and volume now cluster around New York time. Derivative flows have migrated to the CME, and realized volatility has printed cycle effing lows in 2025. Despite what the price is doing, that microstructure engineers the slow grind up. The result is higher floors, slower trends, and a market that absorbs shocks better. Look what happened to Bitcoin during the panic around tariffs. It held up very, very well by comparison to other assets. If the next expansion starts with Bitcoin printing new highs, the liquidity flowing at altcoins could get real crazy real fast. Long story short, Bitcoin staying higher for longer isn't just good for altcoins, it's great for altcoins, okay? Bitcoin dominance is starting to break down below 60% after a non-stop uptrend of more than 1,022 days. Again, it's been grinding pain for anybody trying to play the altcoin game, aside from quick flips and meme coins and stuff like that. Altcoin seasons don't start when Bitcoin is ripping 10% a day and stealing all the market volume. It happens when big players rotate profits out of BTC into higher beta plays, or the market simply looks for better risk reward opportunities elsewhere. The next support levels on the BTC dominance chart are 55.7% and 52.5%. If we get down to 52.5%, your altcoins are going to be getting big bids. Bitcoin's institutional bid is holding the floor right now and attracting fresh capital, giving traders confidence that downside risk is limited. And guess what? It's not just Bitcoin, because now we have Ethereum ETFs. They just had a record-breaking daily inflow of over $1 billion on August 11th. Okay, wait till we get a Solana ETF coming soon to a market near you. It's going to get bid. The crypto total market cap, excluding BTC and stablecoins, shared by Decode Jar over X, suggests that the altcoin market is positioned for a potential breakout here, with the market cap currently at $1.26 trillion and resistance at $1.5 trillion. Now, bullish technical indicators show the start of a new upward trend, not the end, possibly the beginning of a major altcoin impulse. If the $1.5 trillion resistance is breached with sustained volume, the next rally in altcoins could see significant growth, potentially reaching $2 trillion or more. That's a lot of money to be made right there. If Bitcoin breaks out significantly from here and ETF inflows keep flowing in while speculators pile into alts, that could fuel a parabolic rise for altcoins. Because what's your average normie going to do? They're going to come and say, well, Bitcoin at 125, 30, whatever $1,000 is expensive, I'm going to buy the dog coin for less than $1. And if the insane theory holds true that we're not at the end of the bull market, but at the beginning of a new macro bull market, then altcoins aren't going to just have a few good months. They could have the kind of run that turns forgotten bags into portfolio defining moonshots, things that create generational wealth. a multi-year crazy cycle driven by institutional bids and a structural change in the buyers in this market. I know what you're thinking. We've heard all this before. We heard this last cycle. Where was the super cycle? It's coming. It's happening. You have to acknowledge one simple fact. The buyers have changed. The game has changed. And all this crypto treasury madness, yeah, it's probably going to end badly for a lot of these companies, especially the ones doing treasury strategies for meme coins and stuff like that. But the bid is here. The ETF bid is here. We're going to get more ETFs. More ETFs are on the way. Solana's coming, XRP's coming, Dogecoin, Litecoin, and many, many others. That'll give unprecedented exposure to the altcoin class of assets. And that's going to keep rolling out over the next 6 to 18 months. Okay. Plus the treasury companies, not going anywhere anytime soon. The market is maturing. We're getting more advanced financial assets for this asset class. It's no longer just internet nerd money. It's Wall Street's game now, for better or worse. And if you acknowledge that that shift is happening, you can ride the train. Okay? You can look at a lot of assets that are getting bid up massively right now and are still ages away from their all-time highs. This is going to continue. These things will go on to get blistering new highs. It'll be absolutely silly. We're not at silly season yet, but silly season is coming. Thanks for watching.